Following my sharing of why you should not invest in Singapore REITs about 2 months plus back, we have seen the Singapore REITs index coming down for the past 2 months from April till current. Federal Reserve announced a pause in rate hike for June, but does not discount there could be further hikes ahead. With the pause in rate hikes in June, it does seem to give some breath for the market as it rallies up with inflation, slowing with CPI falling to 4% in May 2023. Is this the sign of a bull or a bull trend setup? Will there be any opportunities looking ahead for SG Reits? And what SG Reits can we look into? Do like and subscribe to my channel, and as usual, this is not financial advice. As you can see, the index we are using for SG Reits will be the IDH S-REIT Leaders Index, which tracks the performance of the most liquid real estate investment trust in Singapore in SGD. From 1 year to date, we could see that the index has corrected about 20% from its high of 1,335 to low of 1,063, and at the current 1,165, if the hike resumes in July onwards, we could see a potential head fall of 10% from here, which could potentially break the 1 year low. As we know, in the Mendo pop scene, these 4 singles are known as 4 Heavenly Kings since in the 1990s, and they have strong backing from the music titans back then and even till now. So similarly, the 4 Heavenly Kings of SG Reits should have the characteristic of strong branding and with strong financial backing behind them. Without further ado, let me introduce you the 4 Heavenly Kings of SG Reits, which are listed in Singapore. Heavenly King number 1, Capital Integrated Commercial Trust. Being the Singapore largest REIT with AUM standing at 24.2 billion, CapitaLand Integrated Commercial Trust is segmented into 3 parts, namely office, retail, and integrated development, with majority scheduled in Singapore and the rest in Australia and Germany. CICT portfolio consists of Singaporeans' popular shopping hangout such as Bugis Junction, Bugis Plus, Junction 8, and few others more. Office-wise, consists of Capital Green, one of the Asia Square Tower, the newly minted Capital Sky, and others. For integrated development stands Raffles City, Plaza Singapore, and the rest of it stated. CICT adopts active capital management. As we can see, the percentage of borrowings on fixed interest rate is 81%, which is good, as amidst the high interest rate environment, a fixed rate borrowing provides certainty and hedging against interest risks. For more information, you can click on the link on my past video on CICT. Heavenly King number 2, Fraser Centrepoint Trust. Fraser Centrepoint Trust has a portfolio value of 5.5 billion as of financial year 2032. What makes Fraser Centrepoint Trust different from the other REITs is that they are the pure Singapore suburban retail REIT play. Their shopping malls are near residential area of Singapore, which are the HDBs, and is of direct access to MRT. Who stay near Snakes will know how jammed and crowded one of the floor escalator is during the weekend. FCC's strategy focuses on essential trades and services, which is more than 50% of the retail portfolio. The 2 other Heavenly Kings, which one of them is CICT, is also not purely retail REIT now. So who is another Heavenly King? You can click on the timeline on Heavenly King number 3 to know. For the debt maturity wise, we could see the aggregate leverage increase from 33.9% to 39.6%, mainly due to the bulk of the maturity debt in 2033 will be medium-term notes, followed by unsecured bank borrowings, which both owes higher interest rate to investors and lenders. Hence, we could see potential higher gearing at later part of 2023. If you want a video on Fraser Centrepoint Trust, do hit the like and subscribe button to motivate me. Heavenly King number 3, Maple Pen Asia Commercial Trust. Maple Pen Asia Commercial Trust, the gateway to Asia markets with AUM of 16.6 billion with foothold in these 5 Asia countries. What contributes to uniqueness of Maple Pen Asia Commercial Trust is VivoCity and Mapletree Business Centre constitutes more than 40% to the local scene. Like CICT, MPAC also did a merger of Mapletree Commercial Trust and Mapletree North America Commercial Trust to become what it is now. We will stick to SG Property since this is about SG REIT, where we can see VivoCity is the major portfolio valuator. We can agree that over the past 1 year, the leverage ratio of REITs has increased due to rising interest rate, which increased borrowing costs, and Mapletree Pan Asia Commercial Trust is not excuse too. For MPAC case, there is available of liquidity of almost 2.5 times of total gross debt, which kind of act as an emergency funds, while having 75% of its debt as fixed rate, hedging against any interest risk. If you want more Mapletree video, you can watch my video on Mapletree Industrial REIT, which I'm quite bearish on for now. Heavenly King number 4, Keppel REIT. Everyone guess correctly, Heavenly King number 4 is Keppel REIT. Why Keppel REIT? Because it is one of the older REIT and it is inverse of Fraser Centrepoint Trust. Keppel REIT is full commercial REIT, standing at 9.2 billion of portfolio value. As of current, Keppel REIT has a local presence of near 80%, with the rest in Australia, Japan, and South Korea. The aggregate leverage is at 38.4%, with fixed rate borrowings standing at 76%. We could see that they have refinanced their loans, which extend to 2028. Another element is the 5.4 million 5-year convertible bond at 1.9% coupon rate, which was issued in 2019, will be maturing in 2034. So the most likely situation will be the convertible bond will be convertible into securities and at the point of time in the market. Be it if the share price of Keppel REIT is high or low, share dilution is likely to occur if share price of converted bond into security is higher or lower than current market price. Investors may sell off their shares to profit or cut loss. Although the Singapore portfolio of Keppel REIT has only 4 commercial properties, but 3 of the commercial buildings are valued more than 1 billion each, and they are located at the central business district of Singapore. From here, we can see that the 4 Heavenly King highlighted has been trading below price to book, with Keppel REIT heavily in discount of about 35%, and all 4 are trading below NAV. Gearing ratio wise, Fraser Centrepoint Trust has the lowest percentage, as the other 3 REITs are either mixed with commercial or purely commercial play, which tends to have a longer list for commercial REITs. With the possibility of further hikes, there could be more headwinds for REITs coming. So which Heavenly King are you interested in? Or do you have your own preference of your 4 Heavenly King REITs? Do share with me in your comments. Once again, do hit the like and subscribe button, and I will see you. Adios.